Chances are you clicked this video because you wanted to learn more about USDA loans. But even if you don't think this home buying program is for you, it's absolutely worth listening to because it's a program that allows you to put absolutely zero down in terms of a down payment. And I'll cover everything from who qualifies for a USDA loan, how does it all work, and what are some of the restrictions attached to a USDA loan. And if you're interested in a video of me comparing the pros and cons of a USDA loan or how a USDA loan compares to, say, an FHA loan, I'll do that in a separate video, so make sure to subscribe to stay tuned for that. But moving on, here's an interesting fact for the day. Since USDA stands for U.S. Department of Agriculture, I figured it'd be an agriculture fact. Did you know that over 62 million acres are irrigated in the U.S. and that the sprinkler, which are known as pivots, have about 37,000 miles of pipe and need more than 2 million tires. If you found that fact absolutely shocking like I did, go ahead and hit that like button for me. So to begin with, how does a USDA loan even work? Well, in general, there are three main categories of USDA loans when it comes to the home buying process. The three main categories would be loans that are backed by the USDA, direct loans issued by the USDA, and home improvement loans and grants. The USDA actually has a ton of different programs as far as loans that they offer, but the main two I'm going to cover in this video are the ones that are backed by the USDA as well as the direct loans, because in general the programs work pretty similarly, but there are some nuances. The way that the USDA backed loan works is, think about you loaning me money and I want to buy a yacht with it. You would find it pretty risky, and so you probably wouldn't loan me that much money. But if the government stepped in and said, well, if I, Larry, doesn't pay back that money to you, then the government will step in and pay that money back to you, then you probably would feel more comfortable and therefore willing to loan out more money. If you see my video on FHA loans for first-time home buyers, that program ends up working out the same way. In general, the USDA-backed loans allow for a lower interest rate and to be able to approve to people that may have a low credit score. Now, when it comes to USDA direct loan, those are obviously going to be issued directly from the USDA, so you're going to work with them to get approved for that. Versus if you're working with a separate lender, there's a good chance when they're referring to a USDA loan, they're actually talking about a loan backed by the USDA. And when it comes to the USDA direct loans, those are usually offered for low income or even very low income families. And I'll actually touch on more in a second to kind of figure out whether or not you hit those different thresholds. I also think it's worth checking out those home improvement as well as grants offered by the USDA, because those are meant for renovation to kind of upgrade your home, whether that be safety standards or just modernize it. But in general, you can also qualify for a grant. For example, if you're above 62 years old, then you would actually qualify for a USDA grant to pay for these renovations. So if you know anybody that is above 62 and is living in a rural area, go ahead and do them a solid and reference this video. Now, as far as the requirements for a USDA loan, I always encourage people to go to the source, go to the USDA website, figure out what the actual restrictions and requirements are, because those are going to give you the most up-to-date information. Anything I say in this video is as updated as possible as of 2021, but that doesn't necessarily mean something could happen mid-2021 and something could change. I do want to highlight a few of the key important ones. For example, in general, you need to make less than 115% of the median national income. So to keep that math simple, if the average income was, let's say, $100 per week, then if you make more than 115 per week, you wouldn't qualify because you make too much. This income threshold is actually adjusted based on area and size of your family. So I'll link below a table that has all the income brackets, but they actually have a great website on the USDA where you can kind of input the amount of family members as well as where you're looking, what area you're looking in, and it will tell you what those thresholds actually are. But in general, the more family members you have, then that income requirement or cap is actually higher. So for example, in Lincoln County, Colorado, if you're in that low income bracket, making $56,000, that would be the cap there. But if you have 8 kids, then your cap would actually be much higher at $75,000. If you have 8 kids, then rest in peace to your free time. But if you want to save on that free time, one thing you can do is just comment down below any questions you may have, and I'd be more than happy to research, look into it, or at least point you in the right direction to kind of give you a little bit of help. And that doesn't necessarily mean that you have to have 8 kids to comment down below any questions. In general, these USDA sites are actually pretty easy to navigate, so I can't recommend enough, and I'll link it down below. Just go on the USDA website, put in your location, your family information, and it will tell you exactly the income requirements or thresholds. Now, a few other requirements worth mentioning: you have to be a U.S. citizen, and your place you're buying must be your primary residence, so no vacation homes or rental properties. It also must be located in a qualified rural area. Now, the easiest way to usually figure this out is just to Google out there, such and such county, is it qualified for a USDA loan? But if you can't figure it out quickly from that, then I definitely recommend going to the USDA website. It's pretty cool and easy to navigate. All you have to do is just type in the address and it will let you know if that address is eligible or not. Here's a list as well as far as what the funds can actually be used for. This is in regards to the USDA backed loans, and I'll just kind of summarize briefly, but some of these things would include like a manufactured or modular home. Those are acceptable uses. You could either buy new construction property or even an existing property, or even use those funds to renovate an existing property up to kind of a modern standard. Now, probably the area that has the most questions is, what do I need as far as a credit score to get approved for a USDA loan? And in fact, that's actually why USDA loans have so much interest, is because they actually don't have any strict requirements on what you need to get approved for a USDA loan. Now, that doesn't necessarily mean that they're handing out USDA loans left and right, just that the actual requirement from the USDA's perspective that there's not actual requirements. So especially when it comes to those USDA backed loans, ultimately that decision actually is coming from the banks whether or not they want to extend that. So in general, it's recommended that you have a credit score of 640 or above. Having that credit score is what's going to make it as smooth and easy as possible. You can actually get approved for a USDA loan with a lower credit score, but it's kind of this trade-off. In the end, it's going to be tighter requirements as far as your debt to income ratio. So that's going to translate into not necessarily getting approved for as large of a loan that you may be wanting. Now, I should also mention as well that when it comes to government programs, in particular with USDA loans, that it doesn't necessarily matter so much whether you have a 600 credit score or a 750 credit score in terms of the interest rate that's going to be extended to you. Now, there are some exceptions to that rule, but in general, what's going to really make the credit score matter and become relevant to this decision is that debt to income ratio, which then translates into the amount that you're going to get approved of, not necessarily the interest rate itself. Now, at the end of the day, I always recommend people start with the source, go to the USDA website, look at all the different programs that they offer, because there actually may be one program that you're thinking you're interested in and that is best fits your needs. But then when you start looking into it more, you actually learn about this other program that no one ever told you about that actually better fits your needs and is easier to get approved in your scenario. The USDA offers even loans to businesses as well, not necessarily just home buying process. So even in your scenario, maybe it's not necessarily relevant for you to look at that information, but maybe you encounter somebody that could benefit from that information. So it's best to just kind of take a look. I always find them kind of interesting to see what different programs are offered because there's a ton of them. At the end of the day, I don't necessarily claim to be an expert on all the different types of USDA loans, which is also why I recommend that everybody start with, talking to lenders in your area, because obviously they're going to have firsthand knowledge on what people are using more often, and maybe there's a reason why. Maybe there's local incentives to use one type of program versus another, or maybe buy in one particular area versus another. And so obviously the lenders in your area, and as well as working with realtors in your area, are going to have that knowledge. A good example of this would be that on a national level, more people are using the direct USDA loan program, but perhaps in your area there's actual reason, or more people favor using USDA backed loans instead. And perhaps there's a reason that you should explore, because obviously this is a pretty big purchase. Now, kind of an exception to that advice as far as talking to local lenders and seeing the knowledge they're giving, having worked at a government agency myself and having that firsthand knowledge that not necessarily every government worker knows every single program out there. They're not necessarily an expert in their field. They just happen to work for them. So the same is true with the lender. They obviously are very knowledgeable, but that doesn't necessarily mean that they're going to know every single program out there. So that's why I always recommend going to the source. Start at the USDA website, see if there's a program that fits your needs, and then go talk to a lender. Perhaps they've heard of this program and they realize that there's some faults that you weren't necessarily aware of, and they can give you that advice. So I definitely think starting with the source and then talking to a lender is your best bet. I also think another quick tip is that a lot of people in the home buying process have a huge incentive to kind of rush and pressure you into buying a house as quickly as possible. So if you're just trying to talk to a lender to gain information, stick to it. Make sure that you don't get pressured into kind of snowballing the whole home buying process, and the next thing you know, you're moving into a house that you didn't necessarily mean to buy. So definitely slow down the process. Try to get as much information as possible. Feel free to comment down below if you have any further questions, if you want me to make a future video on a specific topic, and check out my other videos on FHA loans and first-time home buying experience questions. And if you like personal finance or any of those types of topics that I just mentioned, hit that subscribe button, and I hope to see you in the next one.